Welcome members to another weekly update. Please, as always, check the other video which I talk about the long-term and short-term trend. And here's where we zoom in and look on what's on my mind, on my trading screen, and what I'm thinks are good opportunities right now, what I'm into, updates and so on. Let's kick off with a chart of gold. Something I was looking at earlier, but kind of the miners got stopped out for basically minimal loss, like under a few percent, which is always the objective here. You know, it's important to get in at the reason why I teach this at my events, and it's very important you know this, okay? You can't just jump in a trade whenever you feel like it. I only enter a trade if my stop loss is in a sensible position and 5% of the entry price or less. Because it's just an odds game. You know, we're just playing the numbers game here, but it's not going to work if I get stopped out. And, you know, that stop loss needs to be in a proper place. In other words, it breaks support or it breaks a moving average or both. And I don't want that to be any more than 5%. Because it's all about, remember, it's all about, you know, taking small losses and letting winners ride. So that was stopped out for minimal loss in the miners. But the gold, the actual metal itself, has been quite impressive how it's not just doing this random thing, whatever, anymore. The moving average, here's the you know, the bottom line is this with gold. The moving average is pointing up, and the price is above the moving average. That's a bullish indication. We're also seeing that, you know, gold is holding above its moving average here instead of diving around all over the place. So let's look at the daily chart of gold, and here you can see that, you know, there's definitely support coming in for gold, and it gets close to its 200-day moving average there. So the miners, on the other hand, GDX and, you know, Nugget we've looked at, which is basically more leveraged version of GDX. But so GDX is the chart though, because as I say, Nugget's just more leveraged version. Here's the one. Here's where I got, you know, went below the moving average, get stopped out, find out there it goes playing around there. And if it gets back above, they might look at that. But the actual metal, which is obviously the miners are linked to, that's fine. That's hanging in there. My suspicion is that when the Federal Reserve meets on the 12th of December, I think it's the 12th, that they are not going to raise interest rates, as everyone is expecting them to do, and that will send gold higher. Gold is all about the dollar. In fact, all major currencies everything is pretty much traded against the dollar. So it's important to keep an eye on what the dollar is doing with this chart here, UUP. And conversely, the dollar is in a very bad state. Its moving average is pointing aggressively down, and the price of the dollar is below. So this is a bearish condition. What's been given a gold a hard time lately, though, is it got oversold and had this bounce, this kind of counter trend correction here going on. But it's turned around there at that level, and it's kind of just holding on there. So the dollar's had a nice little kind of counter-attack here, but it's not managing to get up to its moving average yet. It's sort of struggling around there. Looks like there seems to be some sort of level of resistance here, maybe around 24.70, 24.60, something like that. So all the time that, you know, there's this kind of tug of war between gold and the dollar, this is the kind of line in the sand, and on gold it's represented its 200 moving average. Even on this one, you know, that's the 200 moving average there, you know, see gold is hovering above it and the dollar is holding below it. So we're kind of in this sort of standoff here between the two. But right now it's in gold's favour, and it's just marking time. Let's look at some individual trades. The pound, I talked about the pound last week. That's where I was looking at it. So about there actually. The next day it just went straight up, but then it sort of came down again. So there's opportunity to get in here. Set around this level here. In fact, on the 8th, it looks like it gave us a little entry point there, and then it's jumped up again. So this is, as I identified last time, a very nice little uptrend established here, and using that trend line here that I drew last week, perhaps even the moving average, but I think more so this trend line as being the stop loss point. Let's check in on Pico. Yeah, I had a bit of a wobble this week. I was in down here, as you know, where there was that support above that. Went above there, up it went, and then down it went, but it's holding position around there. It looks like it's got solid support there actually at 17. So what I'm going to do is I'm going to put a stop loss here, I think at something like, well, I was in here, so I'm just going to use that as my, you know, stop loss. If it gets below 1650, I'm probably just going to close that out for break even, but otherwise that should ride. I mean, it's in pretty good shape. Let's take a look at this on the big chart. Yeah, you can see it's done that before and went off again. Maybe got a bit ahead of itself, just coming back down to earth. The chart is still very bullish. Leave that one open with that stop that I just added. Tile. This one, on the other hand, is holding on to the high ground. It's making a very nice stepping action now. As you know, I was in down here as it kissed the moving average. Up, stepping upwards, holding the high ground, looking for a next run higher actually. Looks like it's making steps here. You know, we've got like these, it's like $1 or 2 steps going on, see? And the next one, hopefully get above there like that. So finding support around 22.50, great stuff. Nice rolling profits there. ENSS. And holding the high ground again. That's great. This week it's just sort of holding there. I was in down here, as you know, on this level of support here, as it's on a collision course for this rising moving average. Beautiful action here. We also had an SV60 trigger here. If you're familiar with that system, there's which you will be if you're a member. You're entitled to get that. There, by the way, the SV60 system. There it is. It's just a very, very simple system. A 30-degree cut into the shaded area up here. And there where you had a second. So my signal, this system here was saying get in around there. SV60 said get in there. You've kind of got, and there it is. It says get in there, and then up she goes. So you had real two of my systems there saying get in, and you know, huge results there. And if you just hang on to there, you've got a really nice running profit in that one there too. And it looks like it is, you know. So that's great stuff with that one. What else do we have here? So we looked at that one. That's Tile. Got FXB. A new one I'm looking at is KMG. And you can see why. This isn't going to be like a straight line entry. This is more like we've got a real kind of diagonal line entry here with this rising moving average here. Might get into range a little bit more this week. Let's see if we can draw a couple of lines here. Over here that sort of intersects the current one a little bit. So we could just be right on it. Let's look at daily chart. Lots of nice touches along the way. The longer the stronger, the more touches the stronger, and the more horizontal the stronger. We might have just had a little bounce already actually. It might already be on its way, which is fine. It's nice to see the, you know, you don't get in the best price, but you know, it's nice to see the action going your way. You know, the drop is over and up she goes. This could be a good entry anywhere around here, I think, even at this price. Maybe not a bit higher than that, but something like that. And I'll stop my stop losses. You know, it's right there under that trend line. So that's a comfortable entry point if it just you know, stays around there or comes back even a little bit. But there's the trend line. Let's try and get as close as that possible on KMG. W got out of that one as it did not do what it's supposed to. It doesn't always happen. And then the frustration. So there it is. There's my exit point. As I told you, if it goes, I was giving it benefit of the doubt around there. If it goes below the moving average, there it was. And then, you know, sure enough, frustrating enough, it gets back above it, but fine. You know, I'm not going to go back into that. It misbehaved, and that's it. Just a little example about stop losses. There's an example there. If I had a stop loss below the moving average, and I was using the intraday price, it would have been triggered, you see. But I only go by closing price, and as it turns out, you see, that's the only price that mattered on that day. And that's the reason I look at that. I wanted to have a look at energy. What's interesting is for this whole, you know, the fundamentals to catch up with the charts about this all being so bullish. Interesting to watch how energy, this is the ETF for the energy sector, is making a very impressive breakout here. What I like about this chart is it seems to respect its moving average, the 40-week. It gets below, stays below, gets above, stays above, gets below, and heads below. Now it's sort of doing the other thing now. It's got above. What I didn't like about it before is that moving average still pointing down. In fact, I was looking at shorting it there, but didn't in the end because it kept going higher. And now they've just seen the moving average just starting to level off. So that is very interesting. Let's look at the daily chart. And this is an indicator for the whole sector, don't forget. You see, so we can now start looking at energy stocks. This was a nice sort of breakout above its average. Nice little pullback. Up she goes. And maybe could come back here to settle around 68 and give a moving average a chance to start turning up. But this is important for the overall thesis about the economy growing, and also about an interesting sector to start looking at, the energy sector. One thing we can look at here, if I can add a 50-day moving average, it'll give us an indication of what's the so-called death cross or golden cross, when the 50-day crosses the 200-day. That's used a lot for being a bullish or bearish sign. And interestingly enough, here's a golden cross, right? See, there's the cross, and that a lot of people, especially on commodities, I will tell you, commodities. And this is a kind of commodity-related ETF. Don't forget. So there's the golden cross, and there's the indicator. Now, I will say about this, that's what I have observed is that the golden cross, and it's reversed, by the way, for a death cross, the 50-day cuts under the 200-day, and that's a bad sign. But I'll tell you, short term, it actually has the opposite effect. Like, I've found golden crosses, when they trigger, things go down a little bit before they start back up again. So there might be an opportunity here to let this one come back down a little bit, and then ride this. And I think there's a line there, maybe even like 68, something like that. I'll be interested to see what happens next, but that could be a nice entry point to ride the ETF and related stocks, in the energy sector. So on that note, I will leave you until next week and speak to you then.